Hi everyone, welcome to Eagle Eyes Talks, your one stop place for sharp and focused market insights. In this channel, I break down stock analysis, intraday trading ideas, and swing trade setups in simple and practical way. To spot opportunities early, stay till the end. Today we analyze Jio Financial Services, trading around 302. I'll break it down step by step, the price action, the option chain, the key financials. We'll spot short-term and medium-term trends. I'll show clear entry and exit points. Watch till the end. You will learn how to trade with confidence. Let's begin. Let's look at price action. Looking at the chart, Jio Financial recently saw a strong rally from 250 to 260 levels up to a high near 340. After touching that level, the stock faced selling pressure and has been in a corrective phase. Currently, the stock trading near 302, which is an important support zone. You can see that this area also coincides with 50 and 200-day moving averages, both hovering around 297 to 306. This means that 295 to 305 ranges make or break zone for the stock. If the price holds here, we may see a bounce. If price breaks down, then further downside may open up. As you can see in the screen, the 50-day EMA is currently around 306 and the 200-day EMA is around 297. The stock is hovering right in between these levels. If Jio Financials manages to close above 308 decisively, it could regain the momentum and target 325 to 340 levels again. On the downside, if it breaks below 295, we may see it sliding towards 280 or even 265 in the short term. So moving averages are showing that the stock is at the critical inflection point. Volume has been slightly lower during this correction phase compared to the buying volume we saw during the rally. This suggests that the fall might be more of a profit booking rather than a complete trend reversal. However, we need to see and watch whether the selling volume picks up at 295. If that happens, then it could mean stronger bearish pressure. The MACD, which measures the momentum, is currently in the negative zone. The blue MACD line is below the red signal line and the histogram bars also negative. This shows that the momentum is still weak and favors the bears for now. However, the slope is flattening, which means the selling pressure might slowing down. If the MACD turns upward, it could signal the beginning of the new bullish phase. Looking at the stochastic RSI, we see that it has dipped near the oversold zone, around 15 to 30 levels. This means the stock is nearing a short-term exhaustion point for sellers, and a bounce could happen soon. Typically, when the stochastic RSI is this low, a reversal or at least a temporary pullback is expected. So putting everything together, here are the key levels. 297 to 295 is the first major support. Below this, 280 is the next strong support. Immediate resistance is at 310, followed by 325, and then the recent high near 340. If the stock sustains above 310, we may see the momentum returning. If it breaks below 295, caution is needed as it could head lower. Now let's confirm the price action move using the option chain. By aligning option chain data with the price action on the chart, we can confirm whether the breakout or breakdown is real and plan our entry and exit with confidence. When we look at the chain, we can understand where traders are placing their bets, where the strong support and resistance are, and also identify pain points as well as the breakout and breakdown zones. First, let's look at the call side of the option chain. Here, the highest open interest is visible at 300 strike, where we have around 2173 contracts. This is followed by closely by 295 strike, which is more than 2176 contracts, and then the 310 strike with 1186 contracts. This tells us that there is a strong resistance between 295 and 300 levels, and then again at 310. Option writers are actively creating positions here, which means they believe the stock will face difficulty moving above this range. The resistance is stronger near the 300 marks. So, on the upside, the ceiling is clearly marked at 300 to 310. If stock wants to move higher, this is the wall must break. Now let's switch to the put side of the option chain. Here the biggest open interest is at 295 strike with around 2516 contracts. The next big move support is at 300 strike with over 2176 contracts. This clearly shows that traders are defending the levels of 295 very strongly, and above that, the 300 levels is the next cushion for the stock. So, the support zone according to the option chain is 295 to 300. Let's see the change in open interest, which shows us where the activity is happening. On the call side, we see massive fresh additions at the 300 strike, with the change of 563 contracts. This is followed by the 290 strike with 302 contracts. This means traders are actively selling calls at the 300 levels, which increases the strength of the resistance there. On the put side, there are fresh additions at the 310 strike with 12 contracts. But generally, the fresh activity is more spread out and less dramatic than the call side. The highest fresh activity is at 315 with 93 contracts. So clearly, there is a tug of war with the biggest battle happening right around the 300 levels, where both call and put open interest are significant. Let's discuss the max pain of the option chain. Max pain is the level at which the majority of the option buyers lose most of the money, and option sellers, who are generally the stronger player, make the most of the profits. Looking at the option chain, the max pain level comes around 300. And interestingly, option chain currently trading very close to the levels between 300 to 310. This means that unless there is a major breakout or breakdown, the market will try to keep the stock price close to 300 until expiry. Now also we'll see the pain points. Based on the open interest data, the strong support zones are at 295 and 300, and the strong resistance zone are at 300 to 310. This gives us a clear initial trading range of 295 on the downside and 310 on the upside. Now, what's about breakout or breakdown levels? If the stock is able to break and sustain above 310, then the short covering from the call writers can quickly push the stock towards 320 or even 325. But if the stock fails to hold above 295 to 300, then put writers will start unwinding and the price can fall further down to 290 or even 280. So, breakout level is 310 and the breakdown level is 295, which means we have to wait till 310 to break to buy, and if price closes below 295 with volumes the on the chart, then we can short with the target of 280. Let's see what we have before we look at the financials. Based on the price action and option chain, the strongest resistance is clearly visible at 310. This is where massive call option selling is concentrated, essentially creating a wall for the price. A sustained breakout above 310 would signal a shift in power. If this level breaks with the strong volume, it will trigger a rapid rally towards the next resistance target at 320. The most critical support is found at 295. This is where traders holding put options have built up a defensive cushion. A breakdown below 295 is the danger zone. If this support falls, expect rapid selling pressure and price would quickly fall toward the next significant support level at 280. So the immediate trading zone is defined by 295 on the lower end and 310 on the higher end. The market is waiting for the one of these two barriers to break, and please watch volume if you like to do confirmation. Higher the volume, the move will sustain, otherwise less likely but still possible. Okay, let's glance through the numbers of Jio Financial Services, what its numbers tells us, what the future might look like, and finally whether I think this stock is a buy, sell or hold. In the latest results, um, In the latest results, Jio Financials have made a profits of about 325 crore. Last year it was around 316 crore. So there is a small growth. Operating profit is higher at around 486 crore, which is an improvement from the previous year. The share price of Jio Financial right now is around 302. But there is an important point. The stock is trading at very high PE of multiples of 100. That means the current price is already expecting a lot of growth in the future. The company is not cheap at today's valuation. Also, the profit margins are currently very high, above 70% operating margin and more than 50% net profit margin. This shows the business is still light and not using too much capital. But in the future, when they give loans and expect or expand insurance, these margins may come down. So let's keep it simple. Suppose in the next few years, Jio Financials grows its revenue around 2,500 crore. If margins stay healthy at around 60%, the operating profit can be 1,500 crores after interest and taxes. So the net profit could be about 1,000 crores. And if that time the market gives a reasonable PE of 40, then the company's valuation can be 40,000 crore, which means the stock price could go up to 600 crores. That would be almost double today's price. So, but let us also look at more cautious case. If margin drops to 40% and the profits reach 650 to 700 crore and the P around 30 times, then the stock may go up to around 400 to 450 crores. That still means growth, but not as big. On the negative side, if things do not go well, like problems with regulations, bad use of capital, or failure to grow, then the stock may not perform and can even fall below the current price. So, the factors that can make Jio Financial stock go up in the future. If mutual fund business and with BlackRock becomes successful and attracts a lot of investor money, that can be a strong growth driver. If lending business expand in a safe way by giving loans to the right kind of customers, then earnings can increase steadily. The insurance joint venture with Allianz can also perform well and bring new revenue streams. On top of that, if regulations remain supportive and allow Geo to launch new financial supports, that will add to growth. And finally, if overall investment sentiment towards fintech companies stay positive, then the stock can move higher. But we must also look at the things that can go wrong. There is execution risk because the company is trying to do many things at the same time. If they fail to manage it properly, results may suffer. Regulations can also become hurdle, and because any strict rule from authorities can slow down the business, competition may put pressure on profit margin, especially in lending and insurance. There is also risk of wrong capital allocation or losers in the lending book if loans go wrong. And most importantly, the stock is already trading at very high valuation, which means that even a small disappointment in results can bring a share price down. So, from short point of view, the stock is trading in sideways near zone support level around 305 to 310. If if it breaks below, this could be test for 295 to 298. So traders should be careful in the short run. Also, the company recently raised a big amount of money by issuing warrant to promoters worth around 15,000 crores. This will give cash for expansion, but it also means we must watch how they use this money. If used wisely, it is positive. If wasted, it can hurt. I will say hold the stock for now. Why? Because the company has a very big potential, but the price is already expensive and it will take time for more profit to grow. So, for the long term investors, you can also buy slowly on dips because if the company executes well, this can be good story for the next 2 to 3 years. My base case target is around 400 to 450 in the medium term. In the bullish case, the stock can go up to 550 to 600. But if things do not go well, there is a risk of falling back. This is the end of the video. How did you like this analysis? Did you find the insights useful for your trading and investment decisions? Remember, I am not a financial advisor. Always consult a registered advisor before you making any investment decisions. Let me know your thoughts in the comments below. I'd love to hear your opinions. If you enjoyed this video, don't forget to hit the like button and subscribe Eagle Eye Stocks and turn on the notification bell so you never miss an update. Thank you for watching and see you in the next video.